Yeah, John, what a tale of two companies. Hewlett-Packard takes it on the chin, forced to release a crummy earnings report early after leaking a memo about the crummy quarter. And then, as if HP couldn't look worse, the company has the further misfortune of reporting those crummy earnings on the very day that Dell was going to crush estimates, reporting GAAP earnings that would top Wall Street's EPS estimates by 28%. Now, John was talking about the free fall in Hewlett-Packard. The one-year stock chart looks pretty ugly. But in the drill down, we look at the company story behind the stock move. And here's what's interesting. The company stories between Dell and Hewlett-Packard may very well be the same. Dell's revenue growth is slipping. It's down to 1% year-over-year growth, even worse than HP's 3% year-over-year sales growth. But if you take a quick note about HP's earnings, we talked about those yesterday. We brought you that breaking news last night about that leaked internal memo about HP's miserable quarter and the urgent call for cost cutting. Now, I mentioned yesterday that HP had missed earnings per share estimates in 9 of 10 quarters. The company called Bloomberg to complain about that today. Hewlett-Packard, and to be sure, many sell-side analysts report two sets of numbers adhering to the generally accepted accounting principles, GAAP, and other numbers adjusted by Hewlett-Packard that do not conform to generally accepted accounting principles. Those are non-GAAP numbers. Well, here are the non-GAAP surprises that Hewlett-Packard would like us to look at. If you look at those numbers, you see using their favored numbers, they've only missed 2 quarters in the last 11, including the one reported this morning. But using the GAAP numbers, the numbers they're required to report by the SEC, you can see indeed that Hewlett-Packard has missed GAAP earnings as of today, now 10 of the last 11 quarters. It's the story behind a company that keeps finding new ways to disappoint investors. John?